DGRW, or the Wisdom Tree US Quality Dividend Growth Fund, has not only outperformed one of my favorite ETFs, SHD, over multiple different timeframes, and keep in mind this is coming from maybe one of the biggest SHD fanboys across YouTube, but DGRW offers a high quality strategy, pays out dividends on a monthly basis, and has one of the highest quality basket of stocks as far as the fund's holdings go that I've seen across the markets. So in today's video, we're going to dig a little bit deeper into DGRW, a sort of less talked about high quality dividend growth fund that I think definitely deserves more respect than it gets. I'm going to share with you guys all the numbers. We're going to back test what this ETF has done so far as performance goes. And I'm going to share with you guys my final thoughts and if or if not I own this one and or am planning on buying it moving forward. So if you're a long-term dividend growth investor, make sure to stick around, drop a like down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. So first off, DGRW is the Wisdom Tree US Quality Dividend Growth Fund, and it says right here, this fund seeks to track the investment results of dividend-paying large-cap companies with growth characteristics in the US equity markets. Now, why DGRW? It's pretty straightforward. It says gain access to the current investment landscape of US large-cap dividend-growing companies by applying quality and growth screens. Use as a complement to high-yielding dividend strategies or as a replacement for large-cap quality strategies. Now let's get this right out of the way. The one negative, in my opinion, the one negative that I always hear investors talk about time and time again is DGRW's expense ratio. The expense ratio is 0.28%. Now comparing that to SHD's 0.06%, it's no secret that DGRW's expense ratio is ridiculously and sort of unfairly high in my opinion. But even with the expense ratio being 0.28%, I promise you you're going to want to look a little bit deeper into this ETF because it might offer exactly what you're looking for. Now the total assets for this one is 15.33 billion, so it is one of the larger ETFs, but still much smaller than some of the other popular ones. The inception date was May 22nd, 2013, so we do have a decent amount of time frame to go off of as far as historical data, to backtest, etc. Now, the next thing I want to talk about when it comes to DGRW is the sector breakdown, and along with that, the holding breakdown. This is one of my favorite things about this ETF. I think it almost has the perfect mix of different companies that offer dividends, offer growth, and offer a little bit of both. This ETF's largest sector is information technology at 29.18%, which again, especially for younger investors, they want more exposure to growth stocks. So the fact that this ETF is a dividend growth focused ETF, but it is so heavy as far as information technology, offers a somewhat unique take on dividend growth investing. Next is healthcare. We got financials, industrials, consumer staples, consumer discretionary, communications, energy, materials, a tiny bit of real estate, utilities, etc. Now, I said a second ago, my favorite thing about DGRW, other than the fact that it pays a dividend monthly, which who doesn't love getting paid dividends more frequently, is of course the holding breakdown. I love the fact that this ETF is sort of a dividend growth focused ETF. It does pay dividends consistently and it's been growing them, but also with this ETF, we're getting a ton of exposure to names like Microsoft, Apple, Broadcom, Nvidia. I mean, these four names just off the bat offer a ton of growth potential. Not saying they're going to grow, not saying they're not, but they offer the potential to grow substantially. Then we have more or less typical dividend focused names like abbvie. We have the Home Depot, Johnson & Johnson, Procter & Gamble, Morgan Stanley, Coca-Cola, and the remaining portfolio is around 63+%. So almost 40% of the portfolio is made up of these few names. So again, if you want exposure, if you don't want exposure, this is sort of going to probably make or break your decision. Now, looking into DGRW's performance over multiple different time frames, this ETF, a lot like a lot of other ETFs that I talk about on my channel, because I mostly talk about only ultra high quality stuff here, and make sure to subscribe if that's what you're looking for. It has basically been trading up and to the right since inception. I mean, if you look at the max time frame, there's been a few moments in history, but then the ETF basically recovers and keeps trading upwards. DGRW is up around 242% in the max time frame, and this is not even including dividends. Now, year to date, it's up around 21%. On the 1 year, it's up around 26%. On the 10-year time frame, it's up 181+%. So this ETF has more or less acted like a growth ETF, but again, it does offer a nice, decent starting yield with monthly paid dividends that have been growing, which I'm going to show you in a second. So now to talk about dividends, because let's be real, quality dividend growth is inside the name of the ETF. So let's hope this ETF has offered some high quality dividend growth. Now, right off the bat, the trailing 12-month dividend yield is pretty low. We're talking 1.49%. But keep in mind, this ETF just keeps on growing, which is going to make it tough for investors to get a nice starting yield on cost. But But again, maybe on some red days, maybe there's going to be a dip in the market. It could be a potentially good idea to buy some DGRW during those days. Or maybe DGRW will just keep growing like it has been since inception, more or less. But honestly, your guess is as good as mine. Now, dividend growth rate over the last 12 months. This is pretty low, especially for an ETF that has dividend growth fund in its name. 2.41%. In the last 3 years, 4.12. The last 5 years, 2.89. In the last 10 years is 8.71. So if we zoom all the way out, there is some decent dividend growth when it comes to DGRW. But let's be real here, there's probably other ETFs across the market that are going to grow their dividends a bit faster. Now, that being said, this ETF does offer dividends, like I've said multiple times now, on a monthly basis, which could be very helpful for investors that are looking to build out positions to maybe help live off of in the future. Now, all that being said, I don't think many investors are buying into DGRW for the juicy 1.49% trailing 12-month dividend growth rate. I think most investors like myself are buying into DGRW because we want more exposure to names like Microsoft, Apple, Broadcom, and other high quality dividend growth names across the portfolio, which, not to mention, there's 300 different individual stocks across everything. But to be fair, in the longer time frame, an 8.7% more or less dividend growth rate is very impressive none the least. But again, are we going to see some massive dividend growth anytime soon here? I guess only time will tell. Now, during the start of the video, I shared with you guys that this ETF has outperformed SCHD, which is my personal favorite and my largest dividend growth position across my portfolios over multiple time frames. So over the last 11.55 years, this is how DGRW and SCHD would stack up side to side. Now, keep in mind, there are expense ratios that are not accounted into this, but just take this with a grain of salt. So over the last 10 or so years, DGRW would have returned an investor with dividends being reinvested around 329+%, or around 13.45% on average per year, which is outstanding. Now, SCHD over the same time frame, 269%, which is not bad whatsoever, but that brings in a total of just under 12% average annual total return. Now, again, either one of these ETFs are outstanding. I personally would have been very happy to turn 10,000 into either 36,000 or 42,000, but either way, however you want to look at it, DGRW has won over this time frame. Now, with dividends not being reinvested, it's more or less the same. DGRW still pulls ahead comparing the two funds, which happens to be two of the most popular ETFs across the dividend growth community. Now, is DGRW going to outperform SCHD and other popular dividend growth style ETFs over the next 10 or so years? Well, I happen to think that there is a chance that that's going to happen, and this is the reason right here. It's because the holding breakdown is so heavy in names like Microsoft, Apple, Broadcom, Nvidia, names that basically disregard dividend growth, dividend payouts, but just grow so fast, or at least have historically. Now, again, if we see a downturn in information technology, if we see some of the higher beta names lose some significant value, well, then names like DGRW are going to pull back significantly. But regardless, DGRW is in my portfolio right now. I do have a very small starter position, but I am looking to build out this position into a larger one over the next several years. So now that we talked about DGRW, the Wisdom Tree US Quality Dividend Growth Fund, one of the best, highest quality dividend growth ETFs across the entire market, in my opinion. I'd lastly want to hear from you guys down below. Would you personally invest into something like DGRW? Why or why not? Let me know your honest thoughts down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.